Good morning, everybody, and welcome to Q&A with Whitey. How are you going? This is the last one in the series of Q&As for the year. So sit back, make sure you got your coffee, have something ready to nibble on for morning tea. Look at that, nice and healthy. And we're going to spend some time today, and we've actually extended the amount of time that we'd normally do up to, and won't necessarily go for, but up to an hour and a half. I hope we'll finish inside of that. But we've got an extended length of time that we can chat this morning, because we're going to be talking largely around best interest duty, where things are at now, and drilling into all your questions that you submitted on this. So that'll be a very important conversation. And before that, we'll then talk a little around a bit of mental health before we get in. But before we jump into those questions and have those conversations, better thank our sponsors, because they do a wonderful thing in supporting us and being able to deliver the content we do to you, always free on educational content. So thanks to ALI, Bluestone, Suncorp, Finstro, On Deck, Prosper, Speedy, Lend, AAMC, Strive Financial, Insurance Advisor Net, Credit Fix Solutions, and Trailbook Loans. I can tell you, I know each of these people personally, and they're all really lovely people. So thank you for your support throughout the year to all of our sponsors. All right, let's get into it. So I'd like to welcome my guests this morning, and we have Renee from Suncorp and Nicolette from Assure, and Dave from Compliance One. Welcome, ladies and gentlemen. Thank you so much for taking time out of the day to be with us today. I really appreciate it. I trust you're all well. You good?
Thank you. I'm well. Glad to be here, Peter.
Good.
Hello,
Excellent.
Peter.
For having me along.
Thanks for having me.
Lovely. No, happy. It's great to have you all on board. So I know there's a lot of things happening as we get to the end of the year, so I appreciate your time. I know it's a busy period. So as I mentioned very briefly in my opening, I'm going to have our conversation around mental wellness, but very specifically something extraordinarily important, a first of its kind for our industry, and something that I have a great passion for, but also a lot of thanks to these two ladies. Dave's dropped out, I'm sure he'll come back a bit later. Renee and Nicolette, for what they have done to help pull this together. There he is. Hey, gosh, that was scary. Yes, stay with us, Dave, it's all right, but we love you, it's okay, unless you need to go. For a bit of background, over the last year and a half, we've been working very closely with a small group of us, including Renee from Suncorp, around our mental health and wellness programs. And from the beginning of those conversations, we were always wanting to bring a counselling support program to brokers in Australia. Not necessarily the easiest thing to do. There's certain loops and roundabouts you've always got to go through. But what we eventually landed on is what we've called a confidential counselling program. And Suncorp, the wonderful people they are, and I don't have to say that because Renee's here, I actually firmly believe this. I mean, I sometimes get challenged a bit with what I say about banks, but I can tell you now, it doesn't include Suncorp, because what they do and their passion, led by you, Renee, in regards to the mental well-being, mental health of our industry and brokers is unlike anyone else I've met. So I've been such a great pleasure and honour to build this program with yourselves. And that's being underpinned by Assure from Nicolette, or Nicolette from Assure, we'll get that the right way around, who actually perform the independent and confidential counselling. So basically, Suncorp financially backing the program. Thank you. Assure are the ones who are doing all the hard yards to look after you if you wind up in a situation that is challenging for you. So what I might do without notice is, Renee, you want to put a few words around what we're doing here, where we're starting at today, and what the future looks like in its growth in 6 to 12 months from an industry point of view. And then, Nicolette, I might pass to you and we'll talk a little bit more about what this counselling program is all about, what it means and how it can help people. So, Renee, you want to just fill in a few of the gaps as to what this journey is looking like for us?
Absolutely. Thanks, Peter. And thanks to everyone for taking the time to join us. It's a really important conversation that we're having today. And I know that Peter's fortnightly sessions have been really well received by you all over the course of this year. So I think today's conversation is as important as all the others, especially with best interest duty. and the impact that that has. So it's timed really well, I think, for what we think and feel that this program will actually deliver to you in the support that you and your family members might need. So what the program looks like is we've named it something different than what, because it's a very similar program to what employees of Suncorp have available to them. And we've changed the name of it to make it relevant to you as a broker and your family. And that's why it's called the Confidential Counselling Program. And we also wanted to make sure that the scope of the program really gave you an awareness that it's not just one specific thing that we might be helping you with or providing support for you. The program will provide you with support across a range of different issues that you might be challenged by. And that's the fantastic beauty of this program. I have actually used the program myself as a Suncorp employee, and so I can actually vouch for the confidentiality, which I think is really important, the expertise and service, and the range of services that's available. And Nicolette will talk to how those services have actually changed in the way that they're actually delivered, particularly through the course of this year. I've done a range of face-to-face type appointments, but it's also got the option for you to be able to do SMS, text message support around something that might be quite urgent, and also phone and video. So in whatever environment you find yourself in or a family member, the program is there to support you. And our initial, to make sure that we do it well and everybody who needs it gets the help and support that they need in the time and in an efficient way and in a way that supports them wherever they're located. We have partnered with the FBAA to initially roll out this program to FBAA members and their families to enable us to get a sense of what is the type of support that's needed and is popular, I guess, and then how do we make sure that in expanding it, which is what we'd like to do, make it available to all in the industry, continuing with our partnership with the FBAA, how do we make sure that in expanding that program, we can deliver the same service to all brokers? So does that help cover as a starting point?
And most commonly, these style of programs that you alluded to before, when you're in an employee situation, is an EAP, an employee assistance program, that we've taken the principle of that. And that's for one term, is almost a mental health crisis counselling support line. If we put it in that box, it does more than that, but it is when you're in that really dark spot and you can't find your way out and you're in dire need of help, this is here to help you. And from a broker industry point of view, I don't believe it's ever been done before. So I'm really proud we've been able to launch this with Suncorp and Assure to deliver this to the marketplace. Because I know, when I look at what's happened throughout COVID and conversations that I've had with people in interstate and folk in Victoria that really got slapped hard with COVID, the stress and anxiety in their voice was just almost unfathomable. You couldn't escape it. It was just there. And even to the point recently, some conversations that I've had in the last week and a half with people, you can still feel that tension, that stress in their voice and the difficulty that they have been through and have had, and in some degree still having. So, this program is critically important to me from a whole of industry point of view. And initially today, it's getting it off the ground and doing it within the FBAA world, and then to everyone, as if that becomes what we can do. And the structure around this basically allows people to have 4 free counselling sessions through Assure. Sorry, you're down here for me, Nicolette. I'm not sure. I feel like, what is it, the Waltons, when they had everybody?
Yeah, or the Brady Bunch, yeah.
Brady Bunch, yeah, that's the one. Sorry about that. But yeah, so it allows people to access that free of charge for 4 sessions, and hopefully that helps them through. If it needs more than that, then that gets carried on another journey. But it's an enabler to be able to help people in our industry, and to me, that's always the most important thing. There's so many things you could do, but I always look at in my eyes, family first, and this is my industry family. So I want to do things here for the family first, and this is why it's starting from my point of view in this particular step. So Nicolette, I might just see if you can put a bit more flesh on the bones around what the program does and what it covers, and
Yeah, I'd love to, Peter.
just a bit more depth on it.
Yeah, thank you. And well done to you for being the workplace champion, for shining the light on mental health. We need people just like you and people like Renee to shine the light on the importance of mental health. And I think for all of us, we all have the ability, I think, to go well and to flourish, and lots of us also struggle. So I think the statistics around mental ill health is probably 50% of us at some time, and I just applaud you guys for bringing it to people's attention. We've been in business for close to 30 years. We've got 1,200 psychologists who work for us, and their job is to help people. Some are struggling, some are going along okay, but have had a shocking 2020. Let's be honest, it's probably many of us on this call. And the fact that it is okay to not be okay, and being able to enlist the support of a professional who is not going to judge you, who has dedicated their lives to understanding human emotion and behaviour to help pull you out and set you forward on a pathway to better coping. And it doesn't always have to be for people who are bothered and broken, depressed and anxious, although it is many of us. But some people just need to look more positively towards the future, start setting some goals, start drinking more water, eating healthier food, talking about their feelings, getting it. Thank you, good, me as well. There's water. There's water in there, and I know this is probably too big to eat today.
I'm sure
You're going to
water.
cut that one up. Yeah, that's it. But I think just some simple things around hanging out with people who drag you up instead of those who drag you down. But lots of us just get overwhelmed, not sleeping well, eating bad foods, and just can't see your way clear. The psychologists are there to assist, and it's as easy as ringing us on 1800 808 374. We've had the wonderful opportunity to partner with Suncorp for many years now, and they're a magnificent organisation who champion the cause and really look after their people, and raise the profile of mental health. And just the fact that, you know, they're working really hard to destigmatise the use of counselling. It's just about calling us. We're 24/7. There's urgent counselling available for people who are in a really dark place, or, you know, it'll take it 1 or 2 days, 3 days to book an appointment to either talk to a psych face-to-face, or on the telephone, Skype or SMS. And you can talk about anything.
I think, Nicolette, though, there's a very important point in that, is that neither the FBAA or Suncorp have any optics across any of your calls, conversations, who, what and wherefore. We have, it is that confidential. It's only Assure who knows anything about that call. We have no optics across it whatsoever. We don't want it, but that's the whole point of having a confidential counselling program. So it's really important because, and although, you know, you mentioned the data before that around 50% of people, and some of the professionals say it's a lot higher than that, but 50% of people in their lifetime will have an issue with mental health, whether it be through anxiety or depression or other issues. And the latest data I saw came out, which is from Western Sydney University, but it talks around, we know that in Australia, 8 people a day die through suicide caused by mental illness. 8 people a day in Australia. Their data was saying that 6 out of 8 of those people are males. Now, this isn't just about men, but it's just data from, you know, in this year. From our industry point of view, when we talk about the broker marketplace, we are 72% male dominated. So there's a very big issue for men in our industry as brokers, not in financial services as such. I'm talking about the broker segment, where there is an extraordinarily high and increased, and it's because the increase was going up, level of suicides by men through mental illness. And we need to make sure we support them as well as the ladies. And we're not cutting that out, it's just where the latest data has come out of, which makes it so important. And people just need to have this complete confidence that no one knows what's going on by your counsellors.
Yeah, that's right. It's so important. it's confidential counselling, and the psychologists are bound by privacy and confidentiality. They're never ever going to share with anyone anything that you discuss in that session. Some people, like me, for example, I've had counselling for mild to moderate anxiety a few years back. I was so thrilled with how I felt, I went and told everybody. But unless you want to share your experience, no one's ever going to find out, and it is so important. And Peter, I also love the point you made about the men's health, and I do believe I saw pictures of you in, was it a floral or Hawaiian suit, promoting
Hawaiian. Yes.
Oh, I loved
Hawaiian.
it. Promoting men's mental health. Basically, it is all about a conversation starter, and you don't have to always do it face to face. You can wear something bright, get a laugh, speak to the fella next to you to say, "That's it. Look at you. You know, how are you, mate? You look ridiculous. Why are you wearing that?"
International Men's Day.
It's perfect, and it's just about starting that conversation. I'm wearing this, I'm talking about mental health. How are you going, Matt? How are you feeling? And then just sharing a story if you want to, or providing them with the opportunity to engage in some counselling. Ring the number. You're not alone. You'll talk to a psych. Maybe you'll cry, maybe you won't. It's okay, but it's a huge weight being lifted off your shoulders.
So what are the counselling services, so I can put it that way?
Yep.
What is provided? So it's more than just crisis management with mental illness, isn't it?
Yeah, absolutely.
What else is in that little?
Yeah.
package?
So in terms of the entitlement, so there's 4 sessions across 12 months to talk about anything that's bothering you. The most common issues that we're faced with for the 1.2 million lives that we cover is around relationships, and they're certainly tried and tested this year with working at home with your partner, homeschooling kids, so all around that relationship piece. The second one's mental health, and then the third is around work demands. So it's any of those particular issues, plus the ability to talk to a psychologist around positive counselling. So we call that 1-800-MY-BEST. So the cornerstone of our business is actually around positive psychology, helping people go from good, going along okay, to great, enabling them to flourish and thrive and be their best self. And I think for many of us who are absolutely exhausted by what 2020's thrown at us, it is a good way to dip your toe in the water and call it more coaching rather than counselling. Just like you'd see a personal trainer to be looking buff over the summer months and eating your fruit and drinking your water and doing some exercise, enlisting the support of a psych to help change your mindset, help you set some goals is a great way to go.
Yeah, it certainly is. And as I said, we've had many people come to us who've been in need, or unfortunately we found out after the event, people have actually wound up having to admit themselves into a hospital. They've gotten to that far and got past it, haven't had the opportunity to sit down and get some confidential counselling from someone that they can trust and who are experts in what they're doing. And I think it's such an important thing for all of us, and just so important to understand that this is not a stigma. I mean, I started this conversation in our industry back some 5 years ago because it was a stigma to talk about mental illness. I had very, very dear and very, very senior friends of mine in this industry who are suffering from depression and going through all sorts of trouble. And, it was something that just didn't get spoken about, or was very difficult to have that conversation, or it was a really problematic period in my time. And then there became business impacts from the way they were being looked at by other people in the industry. And I thought, well, that's just wrong. We need to destigmatize this conversation and make it a commonplace conversation that we're prepared to have or engage with in the right format and manner, which is why I keep having these seminars. And in all honesty, today is probably our largest attendees for Q&A with Whitey. And the next largest, Renee, was the one we did with Todd Duncan around mental health. Remember that? Right? Yeah. So, these conversations are extraordinarily important. Now, admittedly, we've probably got a few extras on board because of the big conversation that's coming up next. But this is very important to our industry. And we need to make sure we stick together and be there for one another throughout all of this. It's just imperative from my books. Yeah. I don't know how you feel, Renee, but what do you see, Renee? Do you see much in the lending perspective from brokers going through mental health challenges?
I can't probably talk specifically to it, but what we do experience is heightened stress in terms of reaction when something potentially doesn't go the way that it was hopefully planned to go. And what we have seen escalate, definitely within the last couple of years, is the way that that frustration is expressed. And I think that social media has given a different avenue for that expression to sometimes be delivered in a way that can be seen as unprofessional. But what we are reading into it is that this is actually someone that might need some help, because even though the situation's not ideal, it may not necessarily warrant that extreme reaction. And if we look back just at this last year, let alone the previous year with the Royal Commission, the pressure on our broker partners is just relenting. And today's conversation is going to demonstrate that, based on all the changes that had to be made to accommodate the recommendations by the Combined Industry Forum. And then moving into this year, how as a broker you were meant to keep across every single lender's policy when it came to face-to-face, BOI, and being able to maintain your business, and then needing to get accustomed to hardship processes and what was every lender doing to help your customer base. And I think the reason I love this industry is because getting your finances in order is an extremely important part of our lives in terms of mental health, on the basis of what financial matters cause when it comes to anxiety. And a lot of brokers I know are so passionate about what they do because they're involved in the dream for that customer, whether it's renovating for that amazing home they've always wanted, or buying the first home and everything that went into that. So they're invested. And when you're invested in every single client and all of that is impacted by change, I think it just takes a toll.
It's an interesting comment you made before about fulfilling dreams. I remember somebody once saying to me, as a mortgage broker, you don't give people home loans, you help people fulfill their dreams. And it's a very emotional journey. And so, from a broking point of view, you're dealing with the client's emotions, you're dealing with a process that you've got to go through. I imagine your credit staff have probably gone through a tough year as well, so I can imagine the tension's got a little bit rowdy at times. So it's a two-way street. It's like saying we've all got to work together. I have had a question come through here which answers this. The question I got is, does the broker need to be currently accredited with Suncorp? And the answer is no. What you do need to be is an FBAA member at the moment. Suncorp is sponsoring this initiative. That means that Suncorp is covering the cost for this for you, which is just a wonderful thing. But you need to be an FBAA member. That's stage one for what Suncorp's doing. Stage two, subject to the success of the program, Suncorp will be looking to expand that further, and that's a conversation for the future. So today, the key piece is you need to be a member of the FBAA. That's where we start today, and your family. So it's the member and their family that it extends to. I got that right?
You have. And can I just talk to a little bit around why we're doing it, just from how it aligns to our purpose and why it's not important to us, or it's not a requirement that you are accredited with us, even though we obviously would love to be part of your lender panel, but we know that that doesn't always suit your customer proposition. So our purpose as a company is to build futures and protect what matters. And we try and do that for our customers, and we try and do that for our business partners. And this is where providing this program aligns to that, because I think that this year has revealed even more the importance of health and well-being and those key things in your life that really matter when times get tough. And that's why this program is important for us. The broker channel is incredibly important to us as an organisation, on the basis that 70% of new customers are introduced to us through the broker channel. So tools and resources that we can deliver that help you as a broker run a sustainable and robust business is incredibly important to us as a lender, whether you use us or not. And we want to align our purpose as a company to the tools and resources that we make available to our customers and you as our business partners.
This is why you guys are such great people. Suncorp are lucky to have you, Renee. So I know, Renee, you personally champion this. So,
Yeah.
you know, it's a good thing.
You are
Nicolette,
amazing, Renee. Yes, Peter.
David, Renee's amazing, remember? David's standing there like a statue. I've got to bring him into the conversation somehow.
Yeah,
I'll get you in a minute, my friend.
Yeah, the bit where I come in is when we start talking about bid, and then everybody wants to call EAP or the CCP for it.
Yeah.
That's right. Yeah, we're about to create the conversation for sure. Yeah. What was that number again? You'll get it on our website. I don't know if Mariah is putting it up in the chat area or something like that as well, but we will do an email after this with our CPDs, and we'll put the number and a link or something in there as well for people as well. Mariah will love me for that because I haven't told her that we're doing it. That's all right.
One other thing I'd just like to say, and it's just that we've talked about mental health, and yes, that it could be that you're experiencing something that could be related to that, but I think what's really important for us is that in Australia, and we talked about the male dominance when it comes to suicide and mental health, and one of the challenges around that is the openness around this conversation. And I think the other difficulty that we have is that as a broker, you're a business owner, and you've got it nailed when it comes to understanding finances, when it comes to running a business, and often there can be your own bias around whether or not you should be asking for help, perhaps because if you look at everything on paper, you know, people are worse off than me, and maybe I should leave this for someone else. What I would say to you is that we just want you to thrive. We want you and your families to thrive. And at the earliest signs of just feeling like things are a bit off and perhaps you're not coping as well as what you might, or your clarity of thinking, especially when it comes to the complex conversation of best interest duty, we want to make sure that you've got resources to help you stay on track, regardless of whether you think that this really should be someone else and you don't want to take that resource away from someone else. So that's the only thing I would just invite you to use the support, because it is there.
Don't hesitate. Don't hesitate.
Peter, can I just add one thing? Sometimes it's really tricky to know when it's time to reach out. And I think some signs and symptoms for each of us might be along the lines of interrupted sleep, just feeling absolutely wrecked, really tired, losing your temper, cloudy thinking, being a little bit difficult to be around, a little bit prickly. Sometimes people turn to alcohol and drink more than they should, more than what the Heart Foundation recommends, with 1 or 2 standard drinks a day. And I don't want to be a wowser over Christmas, but if you can't relax, if you're on your phone the whole time, you're not having face-to-face conversations with, you know, people that you care about, they might be some signs and symptoms for you to possibly reach out and call us. Plus, if you are worried about someone, better to have that conversation early. Look for a change in their behaviour. We celebrate this magnificent day, Are You OK Day, in September, but we want you to be able to have that conversation any day of the year with anyone that you might be concerned about. And if you're nervous about having the conversation, ring us. We'll guide you and help you. But it's basically nipping it in the bud early, looking for a change in their behaviour, and just saying, I'm a little bit worried about you. Are you okay? You know, how's it going for you? How's 2020 going? What are you looking forward to? And then to suggest maybe getting in touch with us, Assure, and we'll be able to assist and pick those people up.
Excellent. Excellent. Well, I'm almost out of time on this part of our segment. Good goodness, the time goes quick. So yeah, very important that people don't hesitate. And probably if you got to think twice about it, you should make that call anyhow, because you actually stopped and hesitated. So make the call. It's there for you. That's what it's all about, and take advantage of that consideration. It's there to support everyone. Nicolette, I want to say thanks. I don't know if I want to bore you with the next level of conversation on regulatory issues within our industry, but thank you for talking to us about we're going with our stress relief lifeline to people, to be able to access something in a very confidential manner, for them to be able to speak to someone and to help them out of a dark space or a difficult space, regardless of what it is, and help them to move forward. So thank you, Nicolette. And again,
thank you, Peter. Thank you.
Suncorp for what you're doing to support this. And there's more on this journey to come. as we go into next year, Assure are going to be delivering some webinars for us. I'm really excited and looking about getting those into our programming, and they'll be available to everyone in the industry as well. And we'll program those out in the early part of next year. So stay tuned for the webinar series that we'll be doing around this as well. Together with, I have some new initiatives that I'll be launching in the new year around mental wellness. So stay tuned for that. But I'm not going to tell you what it is for now. You'll have to wait for next year. Nicolette, thank you so much for what you're doing.
Thanks for having me.
And,
stay well, everybody.
That's a go. Thank you. And
Thank you.
Renee and David, we're going to continue on with our next level of conversation, which is around best interest duty and also regulatory matters. And look, we've had 1 or 2 questions come in, only a few, so kind of hoping you're ready for it. Wow. And folks, I did say we have extended the time to have this conversation. I'm going to do my best to get through all this. I'm not going to have any sort of conversations that go outside of it. But we will wrap up fairly smartly just before 1. Just so you're aware, I'm about to deliver a presentation to AFCA, our Ombudsman. Over the last year and prior to COVID hitting, I spent time with the chair of AFCA, the CEO, as well as the senior executives within AFCA, talking about industry, the challenges that we're having. And we had always planned to do a presentation to the AFCA case managers and their senior people at that level. And COVID hit, that didn't happen, but it's on straight after this. So I will wrap things up fairly promptly, regardless of where we're at, because I need to not miss that one. It's been a long time coming. So hopefully that is something that also helps as a benefit to the entire industry. So, all righty, best interest duty, fun and games, interesting conversations on different levels. But what I'm going to do is jump in to the conversations that I have here and the questions I have here, and let's see how we go. And what we're going to do is a lot of this is going to be answered by Dave Carson. Dave Carson is our regulatory expert, and he, as far as I'm concerned, is the most knowledgeable man when it comes to regulation in this industry. And I'm not just saying it because we work together. Because we work together, I know it to be the truth. Actual fact, I even found out more from David at an event we were at together yesterday. He used to be a lawyer as well as used to working in ASIC. So, yeah, you can't get much better than that when you're trying to challenge ASIC with their regulation. Attack them with their own people, that's what I say. But outside of all that, he's actually a really decent bloke. So, you know, it's pretty good. All right, let's look at the first one here.
And say, mate, that I'm all business up top, but I'm all party down the bottom.
Oh, good on you. Well, there you go. Now, normally I can do that, but today I'm actually wearing jeans once, but normally I got shorts down below. But thanks for sharing, mate. It's, I'm glad to see that you are certainly a human. Well done, buddy. All right, let's look at some of these questions. Otherwise, that will get past us as well. So first one up here is talks about understanding the conflicts within the new regulation. They're talking about bid. However, would appreciate if you could provide a couple of examples of scenarios where there is a conflict, whether it be new or existing, under a best interest duty. So talking about the conflict of interest piece. You got any quick examples to say, well, this would be, or this would be, or this isn't, off the top of your head? Because Dave's not prepped for this. We're doing it straight off the cuff for him.
Well, I guess the first thing I'd say about conflicts of interest is that it's quite difficult to define what a conflict of interest is, because there are a lot of synergies in business and there are a lot of mutual goals between brokers and clients. And I think sometimes brokers fear that those mutual goals where the client benefits and the broker benefits could be seen as a conflict of interest, and it's not. So there's nothing wrong with the broker being paid for providing a service to the client. There's nothing wrong with the client finding the right product with the assistance of a broker. So those things there's not a conflict of interest, there's a confluence of interests, and so they're mutual and they're beneficial for both parties. So when we're looking at conflicts of interest, what we're talking about is where the interests of the broker need to be advanced to the detriment of the client. So that's what we would be looking at. With the whole idea of regulating conflicts of interest is to ensure that where the interests of the broker aren't aligned with the customer, that the broker's interests aren't advanced ahead of the customer such that the customer loses. So the real clear ones would be putting a client into a product that pays higher commission, but actually is a more expensive product for the client, but it's one that delivers no additional benefit to other products in the marketplace that would give the client the same benefit and cost them less money. So that's the clearest example of a conflict. Some of the other conflicts might be if you've got referral partners where there are volume targets which cause you to get towards the end of a referral period, and you think, if I can get 4 more deals over the line, I'm going to receive some sort of additional benefit. And the next 4 customers who come through the door end up going off to a particular provider where there may have been other options that should have been considered for those customers. Now,
one of the interesting pieces in some of the regulation talks about it's not always financial benefit either. It could be a benefit within a relationship.
Yeah, well, that's right.
Product supplier.
Yeah, that's right. So I think that the really basic test is if the client's ending up in the best situation you can put them in as a result of your assistance, it's highly unlikely that there's a conflict of interest. But if you're having to think, oh, I really should put the client off to position A, but I've put them to position B because I want to make my referral partner happy or I want to earn the extra commission, then those things are likely to be conflicts of interest.
Okay. All right, no worries. And Renee, don't hesitate to chime in at any time if you want. We'll keep going. So next one is around, is BID going to see brokers having to prepare the equivalent of a financial planning advice document? And if you say yes, I'll jump down the screen and grab your throat.
No. There is certainly an expectation coming out of the guidance around the best interest duty that better record keeping will be a part of the best interest duty. And the main part of that is that ASIC says they expect that the broker's records will be the thing that most clearly demonstrates that the broker has acted in the best interests of the client. So what ASIC is saying is they want to be able to see on paper or in the file that the broker has done the right thing by the client. But it doesn't mean that you need to go into detailed financial analysis or step outside your area of expertise or do anything other than really what you've probably been doing up until now, which is getting the client, finding out what their objectives are, finding a good product for them and recommending that product and helping them apply for that product. So the key difference is you really need to be thinking about the records that you keep when you're doing that, so that if someone comes along in 2 or 3 years' time and says, I'm looking at that file you did and I'm having trouble understanding why you recommended product X. And what your file should show is that you saw the client, you had a chat, you knew what they wanted, you looked at a few products, you found the product that fit with the client's objectives and you recommended it. And just to reiterate, it's not a best product duty, it's a best interests duty. There will usually be multiple products that will help the client into a better situation, and provided you've done that, you're likely to have met the best interest duty. It's not going to be a case of 3 years after you've done a deal, I'm going to scour the marketplace as it was back when you did the deal and say, I found someone that was 20 basis points cheaper.
Yeah, okay. I have what I'm going to do, I'm going to try and theme a little bit of this together. I've had a question just come through then regarding conflict of interest. It says, is there a grandfathering clause with conflict of interest? As an example, existing loan writer agreements with tiered remuneration on settled volumes. I think we've got to remember that bid starts 1 January. So anything up until then isn't impacted at this stage. But mind you, if ASIC wants to challenge you on you, they probably have a good crack, I would think. Would that be right?
Yeah, that's spot on. So the obligation applies from credit assistance provided as of 1 January 2021. So anything you've done up until now is fine. Just you won't have a defence if an existing relationship is no longer tolerated under the new rules, but you keep it alive.
Now, I'm going to a couple of questions here around bundling, and maybe not the conversation that we might think it is. All right, so there's another conversation around bundling, but we might deal with that a bit later. So I've got here, just in relation to bundling, the issue with most of these is that the broker is not paid for the additional products, so there's no direct benefit to the borrower. In most cases, can you breach bid if you are not receiving a direct benefit on the other products. So I guess what they're saying is you don't provide the duty to the product in the bundle because you're not getting paid for it. I don't think it works that way.
Correct. So the test is whether you provide credit assistance, and when a broker provides credit assistance, they either make a recommendation or a suggestion to a customer that they apply for a particular product with a particular provider, or they assist the customer to make that application. And so if you were to assist a customer to apply for a mortgage, it was bundled with a secondary product, but you received no remuneration for that second product, you would still have given credit assistance in relation to that transaction because you've either suggested or recommended the customer apply for a particular product that comes with the bundled product, or you've assisted them to apply for it. So there's no link between whether you're paid for it and whether the best interest duty applies. The link attaches to what you've done and whether you've provided credit assistance.
Okay.
And in saying that, the original Royal Commission recommendation only ever focused on home loans. So product bundling would not even be a discussion we would need to have if that had been executed in accordance with the recommendations from the Royal Commission, because the Royal Commission said brokers need to act in the best interests of customers when acting in connection with a home loan. And had it been capped there, we would have been home and hosed on that one.
We did try hard.
Indeed, we did.
And then some. All right, so I have another question just come through saying, what if the lender or product decision is based on servicing, e.g. if a client needs the highest borrowing capacity? Well, I guess that's a part of the assessment of bid and lender policy, isn't it? I don't know if that...
I get where I would strip that. Yeah, I'd strip that down to a couple of things. So remember that it's the broker that has a best interest duty, not the product issuer or the ADI, because of course they have a best interest duty to comply with. So the broker, their role there would be to ensure that they're recommending a product that aligns with the customer's interests and needs. So if the customer's need is to maximise their borrowing capacity, then you would be serving their interests in finding the lender that does that for them. And that would just be that's the driving criteria, right? So every client's got different objectives. If the primary objective for that client is maximise my borrowing capacity, then you would put that at the top of the list of reasons of why you recommended a particular product over others in the marketplace. Yeah.
Okay. Sticking with the bundling theme, this broker has written in saying they've had circumstances where a certain bank, and it's not Suncorp, is the only option due to policy. All the research has been done and so on, meets the LVR, the borrower's needs, but only that lender's complete package with they say a forced, but a bundled credit card is offered. The consumer has no option to opt out of that card. And sometimes the clients have said they don't even want the card, even with a small limit. How can we meet best interest duty on that bundle? The only alternative is no loan. So overall, the main objective overrides the suitability of the bundle. Now, we have big conversations going at the moment around credit cards in a bundled product. I don't know if you want to touch on that, where it's forced, they have no option but to take it. How do they meet bid on it? Do you want to?
Yeah, this goes to the very, very heart of the challenge around how product bundling may be treated, and we're still pushing back with ASIC on that as to the correct treatment of bundling. Again, you've got to look at the client's needs and objectives, and if you're meeting the client's needs and objectives through a particular product, even if that product does have a bundled other product with it, if the primary product is meeting the client's needs and objectives and is satisfying the best interest duty, then just because another product is bundled with it won't change the assessment of that primary recommendation. And so the guidance is a little bit confused on this, as is now the explanatory memorandum. But what the law is trying to say is that where a card or another product is bundled with a mortgage, the test applies to the package, not the individual products. Now, ASIC has a different view, and this is, I guess, where I'm most concerned that we get this clarification going forward. In my view, the correct way to look at that scenario would be to say, this was the best product for the customer. Yes, it came with a card they didn't need, but it was additional to their needs. Their needs were met by the other recommendation. Probably the only time that could be called into some question is if there was another standalone product with another provider that was available at the same time on identical terms that didn't carry the bundle product with it. And you could have said to the client, well, you've got a choice here of going with product A that's bundled with a card that you don't need, or product B, which is exactly the same and that doesn't have the card.
And one of the problems in RG273 when you expand upon ASIC's guidance is that you also need to consider, when you've got credit cards a part of this assessment process or this duty, you need to look at standalone cards as well. I mean, my goodness, there's a whole lot of difficulties in that. I spoke on this at a professional development day for a large aggregator yesterday morning, I think it was. There's lots of concerns by people with this, and everybody going, you got to be kidding me. I'm not necessarily going to ask you to chime in on that one, Renee, but I can imagine for all banks, it's a difficulty in that it's not something anybody's asked to be done in the past. So this is, in my mind anyhow, from a broker perspective, something very, very new. And it's a bit like trying to educate your borrowers around what grants and schemes are available. There's a lot of extra work in a lot of this as to where ASIC's landed in their guidance, over and above where the law landed.
Yeah, and I will comment just a little bit. As you know, Peter, we're just working through what this currently means based on the definition and trying to provide some support to help resolve the issue. And what I can say is it does impact us because we are a lender that offers a package product. Fortunately, David, we stepped in and we made a change to our product range over 2 years ago where the credit card is not mandatory, so it's an option for a customer. Fortunately, that works well as it should. However, we're still looking at what is it that we do and what information do we provide to brokers currently with everything else that is available to a customer with the package product to make sure that they've got the information they need to meet their duties under the current definitions. So we're still working through this, and we'll be sharing some information and responses as it progresses.
Yeah, so the point
we'll be very much speaking to the industry once we know more what's happening on the bundle prices and in particular how credit cards are treated. So watch this space because there's quite a solid initiative going on, if I can say, behind the scenes with the regulators and others to get this sorted, some shape, form or another. Sorry, David, I cut across you.
Oh, I was just going to say that created. So what Renee said is really, I guess, demonstrates how easily this could be resolved, and that the issue is that product providers or product issuers have different obligations. So they don't have the best interest duty obligation. So they're not prevented from packaging products together, but if they're distributing their product through a broker network and the product issuer understands that by forcing packaged products into the marketplace that those brokers may be at risk of not being able to keep their own or meet their own obligations, then what we might see is more product providers uncoupling. And to be honest, I suspect this is where the consumer protection mindset of ASIC really wants to go. So they can't come out and outright say the law should be changed so that products can't be bundled, because that gets into a whole lot of messing with free markets and economics and things that they shouldn't be touching. So what they're trying to do is put pressure on the distribution network in a way that the product providers understand that they need to unbundle products to take pressure off of the distribution network. So I think that there's an agenda there that's potentially being played out by putting pressure on the broking end to try and get more unbundled products into the marketplace. And if that happens, it's pretty easy, right? Because you just have that. If you can have that conversation with the customer up front, you want to package this with a card, something else, yes, no, and then you just split. You got an easy pathway decision based on whether the customer wants those things or not.
Yeah, yeah. A couple of quick questions that have just come through. If I'm not accredited with a lender on my panel that has a slightly cheaper establishment fee or interest rate, am I expected to wait and request accreditation with that lender, or go with the best option I have available to me at that point in time? Now, the duty and the framing within the EM and so on was all around that panels are pointed, like panel sizes as such, are pointed at the aggregator, and the broker has accreditations with a portion of that. So your aggregator might have 40 lenders and you may be accredited with 6. Your obligation is to source the best option within the 6 that you're accredited with. Would that be, generally correct, David? Or
yeah, that is correct. The overriding thing there is that you have a reasonable representation of products on your panel that fit the market that you're servicing. And
that's a very important point, though, because if I'm in Sharia lending, there might only be 2 or 3 lenders in the whole country.
Yeah, reverse mortgages similarly.
Reverse mortgages, yeah.
Yeah. So there are discrete pockets of product type or objectives that are met by a very narrow range of products. This ties back to the conflict question as well, where you are more likely to find yourself getting into trouble if you intentionally have a very small panel of products, such that you can try and justify recommending all of the clients off to 1 or 2 lenders only. That's more likely to get you noticed, because effectively what that might be seen at is artificially creating your business to have to funnel loans through to a particular lender, where really the idea of a broker is to have a broader understanding of the market and a reasonably representative understanding of the market, and make a range of recommendations across your panel. So I suspect in the future, ASIC will be calling for data from aggregators and looking at concentration, and brokers that have particularly high concentrations might be subject to further questions. And I'm going to say now, it doesn't mean that you're breaching bid because you put a lot of clients towards a particular product, because it may be that's your business model, that you actually source that client, that type of client, and put them to that type of lender. So it doesn't mean you're breaching bid, but it may raise an eyebrow.
But on that piece, I think there will be eyebrows raised, and that audit and due diligence process to drill will be pretty solid from ASIC once we jump into this. And I'm going to whack a plug in here. If you didn't do the FBAA's educational course on the best interest duty, you should. It's not telling you what forms you need to fill in to comply with bid that your aggregator needs you to do. It actually talks through and teaches you the intent of the law and where things stand, and to understand that top piece so you can apply that within the methodology of your business. And more importantly, we have the only compliance kit in the country that actually has an expert, because you're there for me, David, who's written a checklist that if you happen to get ASIC banging on the door, this checklist will outline, not infinitum, but will give you a damn good start as to what you need to have in your kicker to be able to back what you've done, written by somebody who used to work in the joint. So I would recommend you do the course and you finish it. There's a YouTube video for the webinar piece, which is the education. You then do a knowledge testing course, which is held with AAMC. Once you successfully complete that, you'll get the kit and the certificate and all that other stuff. Very, very important piece to have in your back pocket as you go through this, to make sure that if ASIC knocks on your door, you can back yourself. Otherwise, you could be in all sorts of difficulty. Another thing that's come through quite interesting, I have a question here that says, how long are mortgage brokers liable for the advice we give to our customers? When can we declare we're free from any liability? Well, initially from day one, because mortgage brokers don't give advice. We provide credit assistance. Now, I know that's a technicality, that's extraordinarily important. Let's not go down the advice path. So how long are mortgage brokers liable for the credit assistance they gave to their customers? When can they declare they're free of any liability? That come under common law, wouldn't it, potentially?
Yeah, it'd probably be impacted by the statute of limitations. And so,
was that 7 years?
Yeah, well, it's 7 years, but it's probably 7 years from the conclusion of that transaction. So if you put someone into a 30-year mortgage, So if you put somebody into a product and that product is paid out and done and dusted, then potentially 7 years after the last transaction happened on that product, you would say you were very, very clear.
That's 37 years ago somewhere.
Even for somebody who's in a mortgage, and in fact, this did happen to one of my clients recently. They provided credit assistance in 2005. So this is pre most things. That a client has come forward in 2020 and said, I've been paying too much interest on my loan for the last 15 years. And the broker said, well, I just put you into the deal. You could go talk to the lender for an interest rate reduction. And they're like, no, I asked you and you said I couldn't have one. The broker said, I never did that. And they said, well, you owe me all this money, I'm going to AFCA. And they've gone to AFCA.
But from a bid point of view, the obligation of bid is what happens at, if I got the timing right, the point of application. Is that right?
Correct. Correct. So
what happens 10 years down the track that isn't covered by bid?
Well,
so if they don't renegotiate.
If a complaint were made against you by a client that you assisted 5 years ago, but that client is still in that mortgage, well, let's say 10 years ago, in theory, they could still bring that complaint and your assistance could still be looked at as part of the original transaction.
Yeah, but it goes back to the point where the duty would have been applied, which would have been at the time of application.
That's correct. That's correct. So I think that the ability for a customer to drag a broker into a dispute quite a long time after they've helped them out is quite live, and that's really because of how easy it is to bring a complaint to AFCA. But the likelihood of actually winning a complaint is pretty low. So you've just got to kind of cop and chin that part of dealing with consumers and having a consumer external dispute resolution system that, like the one that we have, is you may have to dance around a few pretty
before we went into lockdown with COVID, so it might have been at the back end of last year, I did a live radio segment on ABC, and the radio interviewer, sorry, I kept coming up with other names I probably shouldn't say, it was a little bit derogatory, but that's okay, that's why I stalled there for a minute. So the radio interviewer was saying, well, you know, I had a borrower here and you know, 10 years down the track, my interest rate was 3% higher than everybody else. Well, the broker didn't act in my best interest. I said, no. The duty, once it's in place, applies back when the application was put out. Just because the interest rate blew out by 3 or 5% above everybody else, yeah, the broker should have been in touch and probably helped out, but that doesn't create a breach of best interest duty.
Correct. And look, and many brokers do maintain relationships with clients, but there is no ongoing obligation either.
No, no, that's
really
right.
There
is an expectation, though.
It becomes incumbent on the client and the customer to then approach the lender and seek a discount. And if the lender says no, then they can get another broker and move who they want.
So, Renee, from your point of view, Renee, from your point of view, as a lender, am I correct in saying, and be happy to say no, you're not, but there is an expectation that brokers will continue to service the clients whilst the loan is still current?
There's an expectation that we definitely see that the broker plays a role in that, and the difficulty we have in defining what that looks like, I think, as an industry, is that every lender provides different levels of access to brokers to be able to service that existing customer, and I think that makes it really difficult for a broker to be able to provide the same level of service to every single customer that they have. We definitely want to partner in and try and retain as many customers as we can by helping brokers when they are doing those anniversary calls and servicing a customer in that way. But we do know that there are, at that moment, there's also the consideration of everything else that's available in the market, and that is there. If the broker chooses to provide that service, then their obligation then is to make sure that they make the best recommendation for the customer at that time. And the only thing I'd say to the example that you provided, David, and I think we're in a really interesting space based on what I'm hearing internally with the number of complaints that are coming through, and that is that we're also and understand that need to sort of be careful here, but as a consumer, and we're each consumers, we also have an obligation to look after ourselves based on the contracts that we agree to. And you get a loan statement, whether you get that monthly, quarterly, 6 monthly, whether you get it online or whether you get it in the mail. And those loan statements will outline your fees, charges, interest rates. And a complaint like that 15 years down the track, I can, based on complaints I've been involved in, I can absolutely say that part of the investigation is, so for the period of the last 15 years receiving your statements, you know, what did you look at and what action did you take to be able to do that? So I suppose I just wanted to give that extra piece from the brokers to the two brokers, know that as a lender, we are also wanting to resolve those type of complaints by supporting you with the information that we provide to that customer directly to help them know what is their actual loan that they have on an ongoing basis.
I agree 100% with that. That is the way it should work. It's just the end piece of that is that anybody can take a complaint to the Ombudsman on any basis, and it may not have any chance of success, but it's just the mere bringing of the complaint is enough for the Ombudsman to open one up. And you know, you might get a letter one day that says the Ombudsman's received a complaint, but it doesn't mean you've done anything wrong. You do it.
That's one of the challenges.
Yeah.
Yes. And people got to remember too, there is threshold limits that, and I can't remember what exactly it's based on. I think it's on premium paid that you get. I think it's 2 uncharged or free cases as such with AFCA if you're not in the wrong. But there is a threshold limit on premium which relates to the size of a business. But,
and they have to find 100% in your favour also. So you could go, no, you could have done something slightly better.
Yes. Hey, we've got another one here. Is a good question. Is what if the lender with the best products is taking too long for a time of approval and the client needs an approval sooner? I think we've got to remember that the duty, when we're looking at best interest duty, it's a combination of many things. And if one of the major priorities for a borrower is to settle in 3 weeks' time, and the lender with the best product is taking 6 weeks just to give you an approval, well, I think that takes you on a journey of a decision, does it not, David? Depending on everything else.
And all I'd say is just have a file note that says the client needed the settlement in 4 weeks, and I explained to them that going to product B might cost them a bit extra, but I had greater confidence the deal would get done. You're 100% safe. If you got that in your file that says, yes, there was a cheaper product, but time was of the essence. I explained that to the customer, and the customer accepted the higher cost of getting certainty on the transaction. And have your proof too. You just can't make things up. So, you know, you might have records of emails and something like that you can say, here's the proof as to why, because here is this lender saying this and this one saying that, and that's why that didn't work for that particular instance for that borrower. You wouldn't want a file note on every file that said the customer was in a hurry. It's a product. It happens that 90% of your deals go to product A. So you can't cook it, but certainly they're the sort of files where you really want just a note on top that explains it. And as I've said before, I think it's great practice to get into is to write a little short story at the end of the file. So actually when you complete the transaction and you've put it up, write yourself a little file note on the top that says, this is the sort of client that came to me, this is what they did, this is what they wanted, this is what we talked about, and this is why I recommend the product that I did. Because you'll probably have all those things in the file, but sometimes recreating that 2 or 3 years down the track after you've done lots of deals can be quite challenging. You've got yourself a little summary on the top. You can look at that and go, oh, that's what I remember these guys, and we went off to an unusual lender because of the circumstances or something.
Yeah. Okay. So we've got here, does bid apply to lenders or banks due to their direct channel? I think the simple answer to that is no. Best interest duty does not apply to lenders regardless of. I don't know if you want to add anything into it, Renee. I mean, I know why. It's I don't know if you wanted to comment on that or not, because it doesn't. You guys got your banking code of practice.
That's right, we do, and I'll actually let David comment first and add to it, but no, it doesn't apply to our direct lenders, and the way that we see it playing out for brokers is that it just actually supports the proposition that brokers provide to consumers, and we we know that it is the strongest choice by customers when they're looking for lending. And we see that best interest duty will actually just reinforce the work that we know that brokers do and what they already are providing to customers. David, I'll pass to you.
Yeah, I think you've covered it really well. Yeah, the bid doesn't apply to brokers doing direct channel on behalf of credit providers. It's a credit assistance.
Well, I'm going to keep moving, guys, because I'm going to run out of time. I'm getting slammed with questions on my phone, and I'm not off page 1 in front of me. So I'm going to step through a bit quicker. So I got here, our aggregator is saying that under the legislation, we must provide periodic review of the client's situation. Now, I can tell you now, we are not going to sit here and debate what an aggregator tells you to do for what they want to do in their commercial operation. So I just want to separate the 2 points. If an aggregator tells you to do something and they're the ACL, then you do as you're told, basically. From a legislation point of view, David, do you want to comment on periodic review? Is that in the legislation?
It's not. And so, yeah, but every business is free to make its own rules around what it wants to do. But there's no specific obligation arising under the new best interest duty legislation that would have you regularly reviewing client accounts.
Yeah. Excellent. Thank you. So the answer to that is no, but if your aggregator wants you to do it, then you do it. And you know what, personally, from my point of view, if I was still broking today and I've had a couple of brokerages in the past, I surely would be. I would have thought that was a bit of a no-brainer, but yeah, whichever goes. A couple of questions around clawbacks. I'm going to sort of break this down a little bit. And I've had this conversation the other day at the PD Day, that concerns around not being able to pass on a clawback back to a borrower. And at the same time, you know, there are some banks who are giving clients, you know, $2,000, $3,000, $4,000 an enticement to refinance to them. So it is a bone of contention within the broker marketplace that some lenders are giving cash bonuses up front, yet still are applying clawback. So you say, well, if you're prepared to give it away there, why are you taking a clawback from me if I've done nothing wrong? If you breach your agreements, if you've broken the law, then you own it. But to me, and this is my little soapbox I stand on, I have stood on for over 10 years. You've done your job, the loan's settled, you shouldn't have somebody taking it off you. I'm not going to get you to enter into that debate, Renee. It's just, I do understand that conversation and I find it's difficult, but can I say one thing on that? There is always something. Even when I was lending in retail banking, so I started my career in retail banking, when I was heading up or within mortgage broker firms that I was general manager or sales manager or CEO of, or I was broking myself, there's always something out in the marketplace to compete against. It's not going to change. And if it's not cash incentives, it's going to be discounted rates, it's going to be honeymoon facilities, it's going to be something. So I think we've got to be a little bit balanced in it. These things come and go, but if it's not one thing, it'll be something else. And I do empathise with that conversation very, very strongly. So I sit there going, yeah, it shouldn't happen. But yeah, we will move on from that. The piece that I've got here is that can I send my client an invoice if they trigger a clawback if the client has already agreed to it? Now, I think this is fairly clear as to where we're heading this journey. David, you want to chime on that one?
Yeah, they've made the clawback things quite complex under the new changes to the law. So what they've done is they've made all payments to brokers conflicted payments unless they're exempt. So everything that brokers get paid is called conflicted remuneration unless it's exempt. And there's quite a narrow group of things that are exempt. Clawback provisions that operate for a maximum of 2 years are exempt, but they cannot be recovered from the client. So if you attempted to recover commission clawed back, if you attempted to recover that from the client, that would fall under the conflicted remuneration ban. You wouldn't be able to receive that remuneration. You would be, so yeah, even if there was an agreement to do it, the agreement would be illegal because there's a provision that says you're not allowed to do it. So you can't get a client to enter into an agreement to have the law operate differently to what it does.
Yeah, okay. Are there any regulatory changes coming in the commercial lending space? I haven't seen any. Have you heard any whispers, David or Renee?
No, if anything, the indications are good that they're trying to really push commercial well outside the REIT.
Yeah.
So
I had a huge debate around this from 2008 when I was in the industry consultation program to Treasury to bring the NTCP in. And I did everything possible to make sure we kept big distances between commercial and consumer style lending, so it never came under what was originally the Finance Brokers Act, not the NTCP, but wound up as the NTCP.
Just a slight segue to that. Commercial can end up in external dispute resolution. So if you hold a license to provide credit assistance for consumers, it's a condition of your license that you be a member of AFCA. And if you're a member of AFCA, a commercial client could bring a dispute to AFCA, and AFCA has modified the way that it looks at commercial disputes. So it's so you could still end up in external dispute resolution, but there's no, ASIC has no jurisdiction over that and wouldn't be looking at commercial files for compliance with regulatory obligations.
No worries. Okay, next one. Is ASIC putting out guidance or a template for what information needs to be captured in the documentation for the reasons for recommendations? Wouldn't that be nice?
No, the problem with that, of course, ASIC puts out a template, everyone uses it, and then when they realise it's wrong, they've got no one to blame but themselves. So they learned many years.
To ASIC, but that's a tough gig. They provided the docs.
Yeah, they learned many years ago not to give templates because they can't get themselves out of trouble.
All right. What is the reason that that brokers are not paid soon after settlement of a loan? Why do they have to wait 4 to 5 weeks? And I think this question is one that is probably not a you question, David, but there's a variation between lenders as to timings and actually collating the data and processing it and then doing the runs for commissions. In the motor vehicle space, I think they clear within a couple of days of settlement. But I think that's going to be challenged to be doing it in short timeframes, wouldn't it, Renee? Because the complexities of that reconciliation, if you like, and then distribution, would that be fair? Because there's such a high volume.
That's correct. And what I would say is that I can't speak on behalf of all lenders, but I do know that the process for commissions has become very complicated based on however the application of paying net of offset was interpreted. So we had the first, we started paying the residual payment as of January this year, which has created some complications, and it does take extensive time to process those commissions now. So I know that all lenders are
construction facilities as well. You've got all sorts of different things, lines of credits, and
we are all committed to making it work better and more efficiently. So, but I think that is a progress over time.
Okay. I'm going to bring this one in now, but will best interest duty affect asset finance brokers who have a mortgage broking arm on their business? We might as well say, even if they don't. But I think we need to preface this conversation on the fact it would be consumer asset finance, not commercial asset finance. So the person who's asked that question, anyone listening, understand this conversation's all around consumer. It's not around commercial. So consumer asset finance, do you want to have a little touch on that one day? We'll try and keep it short. We know the answer.
Yeah, that's right. It's all consumer. I was going to just give you the new wording out of that credit standard. So we're under this new the changes that they've made to the responsible lending obligations. They've really changed the language about what's commercial. So under the old test, it used to be the purpose of the borrowing had to be 51% or more commercial. So now the way in which it's worded, I've got it right here, is if the credit is provided or intended to be provided by the licensee, and the purposes are not merely minor or incidental to the transaction, then it's commercial. So it used to be had to be 51% commercial. Now it's not merely minor or incidental to, which means that the threshold for commercial borrowing is now lower than it used to be. So if somebody's got a business purpose and they're commingling consumer, then it doesn't have to be 51-49. It could be 90% well, it could be whatever. I won't even give you percentages, but as long as the purpose of the commercial borrowing isn't merely incidental to or minor relative to the rest of the borrowing. But if it's
so
commercial,
the reality, based on the question, but also I've got a couple of other questions here, so I'm just going to bundle them up for the sake of a better term, get them together. So there is a thing called the extension of the best interest duty, which has been proposed by Treasury, that is yet to be put before the House and then to go brought into practical application, originally positioned for the beginning of March 2021. It's been caught up with the same process as responsible lending obligations reviews. Responsible lending has now not made it through the House before Christmas because of some senators who are questioning things, and it's not back on the table until February, which will push the timelines around a bit. And I'm not sure if the same timelines will still impact the extension of bid, and we're yet to hear on that. But the extension of bid is all about, if you provide consumer asset finance, you're going to be caught by best interest duty. Now, David and I have been working quite closely with Treasury in regards to consultation around this. We are lobbying for an extension of time for that introduction, amongst other things, because the reality is there's just not the time for that particular market segment to get up to speed with everything that they need to do. So, and we also understand that there is not such a broad range of products that can be offered as well. I don't know, and David, correct me if I'm wrong, but I don't know there's such a big concern from Treasury in regards to the depth of options that can be given. It is whatever it is, but it's more so the principle of the application of bid, what it's generally trying to achieve. Would that be fair at this stage, knowing we've seen nothing but snippets of where they're heading with this? There's no draft legislation or anything to work from. We're flying a little bit on conversational and unlimited information.
Yeah, I've just got a truck reversing outside, so I'm not sure if that's coming through in the background. But yeah, look, I think it's a bit unfortunate the way they've gone about extension of bid. They really just have gone, well, let's just make it for everybody. And I think that was in response to the unusual situation created through the bid originally applying to mortgage brokers, and then them saying it's not only applying to mortgages, but anything a mortgage broker does. And then we said, well, if that's the case, then a mortgage broker who's helping someone apply for a car loan is subject to bid, but somebody who's in asset finance doesn't do mortgages would provide that same service and not be subject to bid. And what we were really trying to do was say to government, you've just got to pull it back to apply to what it was intended to apply to, which is home loans. But I think government's just looked at it and said, well, let's just throw it open to all credit assistance providers. So we'll have a best interest duty for all brokers. And the challenge is there really hasn't been much analysis done of the marketplace, why there would be any justification for that bid, how it would operate in the asset finance space. So it's really the way I describe it. It's a bit of a thought bubble from government rather than anything that was well thought through before they proposed it. So we'll
see how it plays out.
Yeah, we'll still push against it, but if it is inevitable, then we'll try and make it work as best we can for industry.
As best we can. Yeah. I've got a question here now. Will bid apply to commercial applications? No, it's all about consumer debts. We did touch on that before. How do brokers keep client notes and what format or process? Well, that's directed by the aggregator. And the simple thing is, every time we have a conversation with ASIC about what are you going to be looking at, it's all about documentation. Document. You've got to have comprehensive notes, document everything. And if you think you haven't documented everything, you're probably right, because you thought you may not have, so document more. I don't think there's anything anywhere that there can be excessive documentation when it comes to proving your cases to what the recommendations you gave. Would that be correct, principally, Dave?
Yeah, well, I suppose more is usually better. The main thing for me is that I should just be able to pick up a file that's however old and understand who the customer was, what they wanted, and why you recommended what you did. So, you know, the way I look at it is if you work with other people, get somebody else to pick up one of your files and have a look at it and tell you whether they can understand why you told Mr. and Mrs. X to apply for this loan with this provider. If the file can tell you that story, then I reckon you're 99% there.
Yeah, and principally an executive summary as well at the beginning to be able to get that snapshot, then the details are put underneath.
And those getting a review by a third person picks up unusual things like, well, hang on, the client came to you seeking a loan for 500, but they ended up applying for 700. I can't see a note on your file that explains why they applied for more money. You'd be like, oh, well, they came and they spoke to me about it, and we thought we'd get more because they were going to go off and do something else with the money. And you go, yeah, that's what you want the file note on. So the file note would say, Mr. and Mrs. X came asking 500. We later on had a conversation. They identified they needed another 200 for something else. We bundled that together and applied for 700. And now I understand why they 700, and I'm happy.
Yeah, okay. I'm getting very close to out of time. I wanted to get your thoughts on, I've got a question here directed at me saying, what are your thoughts about the upcoming, the Great Reset, which will affect the whole lending space? So I'm going to put my hand up and go, I don't know what the Great Reset is. Have you guys heard of that? No?
I can only think it's
we're going to move on. Yeah.
Either turning off JobKeeper, JobSeeker payments, the fiscal cliff again. Either that or a migration away to the unregulated stuff like the buy now, pay later.
Yeah, I'm sorry I can't answer that one. I really don't know what it is. I've got one here, Dave. If an existing high net worth client who is a developer wants to pay me 1% brokerage on his new home loan that is in his personal name, can you accept this? So I guess that's a fee for service over above, even though he realises I'll be paid an upfront and trail commission from the lender. How do I mitigate this? So you're taking upfront and trail plus a mandated fee.
Direct payments from a customer to a broker are not, they don't form part of conflicted remuneration. So you can,
there you go.
You can negotiate any direct payment from the customer to you because they're knowingly paying that with your consent. Yep.
Okay. Last one. This will be the last one, but I think it's a good one, David, because it's a very valid question that you and I are tackling with the regulators at the moment. In consumer asset finance, you have the ability to dial down your commission to meet. Where does that go to? No commissions to meet bid?
Yeah. So this is a very live issue at the moment. The way that I see it presently is that as a broker, you're entitled to get paid to do your job, and it's not, you don't have a legal obligation to cut your own throat to meet some obligation to give the client the best deal. At the end of the day, you are assisting a client to apply and you're making a recommendation for them to apply, and ultimately it's their decision whether they accept that recommendation or not. You are able to price the deal and put a deal to a customer based on not dialing down. If you don't do it, if you don't flex down, I still think that you're okay because that's the price that you're able to provide your service at, and you present that to the client and you can assist them to apply on those terms. If the client doesn't like it, they can shop it around.
Yeah, and that conversation is ongoing with the regulator at the moment. It's part of our submission. So there's a little bit of watch this space on that one because we don't have a definitive outcome at this point in time versus where we believe it should land. I genuinely believe
we can't end up in a situation where these obligations are interpreted to mean that you have to offer the deal the cheapest you possibly can to make the client happy, because it offends free market principles. It offends the basic core of economics of supply and demand, and putting up a price and you accepting that price and for the contract. So I don't think it's going to be that way, but it will be nice to get clarification.
Yes, yeah, I agree. I need to wrap up. Thank you so much. Any last words at all, Renee, before we do?
No, only I'd just like to thank you, Peter, for this great conversation, and David, thank you for your insights and your time. I think the information that you've shared is exceptionally helpful, especially at the moment, and we just look forward to supporting the FBAA and its members as we progress through, particularly the next 1 to 3 months.
Excellent. Thank you. David, any last words?
Yeah, well said, Renee. And again, just thanks to the FBAA for giving me the opportunity to speak with people and to advance these issues and try and get good outcomes on behalf of the members. And I'm always happy to assist with answering questions and helping people try and demystify some of the very challenging issues that come up with this sort of regulation.
And there'll be plenty of them. Look, thank you so much. And also thanks to Nicolette, who is with us before from Assured, our confidential counselling program to assist you with any mental illness challenges you have is extraordinarily important. Don't hesitate to use it. It's complete confidence. Renee, David, Merry Christmas. thank you so much for being with us and being a part of us throughout this year. I really have enjoyed your engagement, and of course from Suncorp support and the initiatives that we're doing. Have a great one, guys, and we will see you again, and because Q&A with Whitey will be back in 2021. So Merry Christmas, and I'll wrap up from there. You guys stay well, and thank you.
Thank you.
All
Goodbye.
Right, all the best. Take care. Okay, so we'll finish up there. Thanks once again to our sponsors. We really appreciate their support, and it's what enables us to bring this content to you free of charge. And thank you to them. And of course, don't forget, you are going to get an email after this, which will have your CPD code on it for what is 1.5 hours CPD, even though our slide probably says 1. We did extend this one further. It's worth 1.5 hours. Everybody stay well. Merry Christmas and have a safe New Year's. And I will look forward to seeing you face to face as well as through screens in 2021. Take care. Bye for now.